Hello, welcome to the Axino Small Cap Investor Channel. I'm really happy to have today Merlin Mark Johnson as Executive Vice President of Global Atomic Corporation with me. You may have recalled that we have been on site a year ago in Turkey to look at this recycling plant for zinc. And today I would like to talk with Merlin about the DASA project as well, because that has progressed quite nicely and we have had good news flow. But I would like to dig into some key questions today with him. And Merlin, thanks for having you here in Germany. Give us a brief rundown what has happened in Turkey, what is the outlook. We have seen a little bit of a news flow and then we switch to the uranium asset.
Okay, in Turkey, with the zinc plant, it buys dust from steel mills and it burns it in a kiln and it produces a zinc concentrate. It's been profitable since 2009 and we've just had the financial results for Global Atomic, which showed that last year the zinc contributed an EBITDA of $10 million US to Global Atomic.
And who is your partner there?
Yes, that $10 million is just 49% of the EBITDA. Our partner is 51% owner, and that's Befesa SA. They're listed in Frankfurt. They're a $1.4 billion company, and they have got recycling facilities across Europe, including and our project in Turkey and in Korea as well.
Sounds like a very strong partner. I have read that currently the plant is not operating because you are just bringing a new technology in, a new kiln, as you call it, and you will more than double the size. So what's behind that expansion?
We'll more than double the EBITDA, but the kiln itself will just be slightly less than double. We produced 30 million pounds of zinc last year, and we, at full capacity, will be able to produce over 60 million pounds, even though the throughput is slightly lower because of increased efficiencies, increased recoveries. That expansion has been going on for about 8 months so far, and we look to have it completed in September of this year, with commissioning going through to the end of this year in Q4.
So that's not so far away, but let's talk about valuation. We have a market cap with Global Atomic at around 44 million US, 60 million in Canadian, and you have already a cash flow business model within the company. Give us a little bit of your opinion in terms of valuation, in terms of market cap of Befesa, your ownership. So we would like to understand a little bit in more detail.
It's very rare for a development or an exploration company to have cash flow, and that really differentiates Global Atomic from other mineral companies because we don't suffer the same equity dilution. So the drilling from last year was funded by the dividend from Turkey. So that's just a kind of a conceptual difference. In terms of the valuation of the zinc business, our partner trades on 10 times cash flow and 14 times EBITDA. Now, our EBITDA was $10 million last year. Yes, we're going through an expansion at the moment, and yes, there is a bit of weakness in Turkey at the moment, well, more than a bit of weakness. The economy is weak, so we will probably not be at full capacity next year. But I think one can look at the value of that zinc project and say, it's probably around $100 million, maybe as much as $150 million, maybe today a little bit less. But we believe that that more than covers the market capitalization of the company. And so what that means is you get the DASA uranium project for free.
I like that to hear because we are shareholders of the company and we would like to express the potential conflict of interest, which we hereby do. But it sounds interesting because there is one asset undervalued, but now we are talking about the DASA uranium project in Niger, and obviously that is maybe for free. So Merlin, what about DASA? It's a high-grade deposit. You have a lot of advantages, but you have also a relationship with Orano. Please explain a little bit in more detail.
There are three key things about the DASA project. One is it's very high-grade and big. Second is it's clean metallurgy, so it's got no deleterious elements. And thirdly, we have this arrangement with Orano, which is ex-Areva, where we have got an agreement that we'll work towards an agreement to deliver ore to their two mines in the north. They are 120 kilometers away, more or less, which will be about $13 per ton of trucking, or $12 to $14 per ton. And it means that we can get into production quickly because we don't have to build the plant, and at low cost because we don't have to build the plant.
I mean, that's a really big advantage, but that sounds to me that you could use the cash flow model funding your uranium asset. Is that real?
It's very real, yes, because when you look at the cash flow from the zinc plant, there are several things you can do with it. You can structure a convertible bond. We might be able to raise debt finance against the cash flows from our share in the plant, or ultimately we may, if we want to, at a certain point in time, we may consider selling the 49%. And we've had informal discussions with our partners about that.
That's really unique. I have never seen any junior company with such low profile risking advantages, which will definitely help to develop the company further in its curve to build something more substantial. What benefits do you see from the Orano relationship?
Well, the key thing about that relationship is it reduces the timeline. So building a new plant is very difficult. It takes time and it costs money. So we're looking, if we can finalize the agreements with Orano, which we hope to do this year, we should be able to complete the feasibility study and the permitting next year, which means that by 2021 we should be able to be starting a development decision with the plan to have production in early 2022.
And you think even with today's spot price you can make money, or?
Yes. The spot price is $25 a pound. If you look at the forward curve out to the beginning of 2022, the price is $30 a pound. And because our grade is so high, we actually have to dilute. We have to make sure that the grade is so low to bring it within safe limits at certain points of the mine plan. We've had to switch from an underground mine to an open pit to make sure that the ventilation is improved. It covers the trucking cost, it covers the processing cost, even at $30 a pound, and with a healthy margin.
So what is your news flow for the next, let's say, 6 months in Niger?
The first main news in Niger is that we're putting out a new resource on the Dasa project. It will include all of the drilling from last year, because the previous resource only included half of the most recent drilling, and it will include chemical assays on all of the holes that were drilled last year, or most of the holes that were drilled last year. So new news flow. New mineral resource, and then in the latter part of the year we hope to have detailed numbers from the discussion with Orano. In between then we'll probably start the feasibility study and make an announcement out of that, and then hopefully next year we're coming into the conclusion of the feasibility study.
That's excellent. Obviously the company is not really very well known within the investor community. You are based in London, you have told me. It's a good advantage for us having you maybe more often here in Germany, and maybe we can do even more interviews in the future. But your goal is to really market the company and get the story out as much as you can to somehow uplift the valuation of the company.
Yes, we're looking to grow the investor base. I'm just trying to get as many people to know the story as possible. We're redoing the website. I'll be marketing at most of the main conferences that we can do through the year, and we'll be putting as much as we can out on videos and keep the news releases coming on a regular basis.
Excellent. Thank you very much, Merlin. I wish you all the best. But I'm sure we will talk frequently and we'll have updates, and I invite you to check out the company. If you go on globalatomicorporation.com or on axino.de, you will find much more information about the company and its projects. Look at the videos, follow us, and then you can make your own decision if this is a good pick. I believe, again, we are shareholders, we have a conflict of interest, but this company has a lot of advantages as a junior company, which I think de-risk to be in at that early stage. But the company is not known and has 2 assets and has cash flow. All be good news, and I think we will have some fun with that company. Thank you very much for listening, and we talk to you soon. Thanks, bye.